Right, good morning everybody. Nice to see you all. Welcome to our seminar on what it feels like to sell a business. I'm Andy Ryder, so I'm the corporate finance partner at Shorts. So I spend a lot of my time helping owner managers through sort of exit planning routes. So as always, these things are a bit of housekeeping, so we'll get that out of the way before we start. So there isn't a fire drill, so fire alarm goes off. A little exit, please. You have got some feedback forms, I hope, hanging around on your chairs. At the end, if you could fill those in, that would be really appreciated. It really helps us improve these sort of events. Question people usually ask is, are we going to get a copy of the slides? Yes, you will. We'll email a copy of the slides to everybody afterwards, so you'll have those available. And last bit of sort of housekeeping, really welcome questions, but we have got quite a busy agenda. So to help us sort of get through things, hopefully approximately on time, it'd be great if you could sort of not do those as we go along, but wait till the end, because we are going to have a sort of Q&A session with all the speakers. Very welcome to ask them questions at the end. We'd really appreciate that. Or equally, if you don't feel comfortable sort of asking in that forum, everybody's going to hang around afterwards. If you want to catch people one-on-one and ask a question, please feel free to do that too. People are very happy to do so. So in terms of the agenda, I'm going to attempt to sort of set the scene really in my bit. So basically look at what the options are. Then when we talk to clients about those options, what are the things we talk to them about as being the criteria, objectives they should think about in order to work out which might be the most suitable option for them. And then obviously we see sort of hundreds of transactions over the years with people. So we'll then sort of try and just very high level, I'll talk you through what each transaction looks like, what are the sort of top sort of pros and cons of each at a very high level. And then when we look at all the deals we've seen, what are the general emotions we've seen from clients, to give some high level feeling, most positive and sort of negative of the options that are available. We've then got another couple of sort of professional advisor speakers. So we've got Dave Leonard from HSBC, so he'll be able to talk you through sort of the funding sort of elements of transactions. We've got Rob Moore from Taylor & Emmett, and he'll be able to talk you through the legal aspects of transactions. So again, those two guys have been through dozens, hundreds of transactions and give you a different flavour from a different advisor perspective. And then actually much more importantly, I think, we've got a couple of our clients here today, which I think, we've begged, persuaded, asked nicely, and they've really kindly offered to give up their time for us to talk to you. And I think you will find that, I hope, really, really helpful, because actually they're guys who were sat where you were some time ago, thinking about their exit options, what shall we do? And they've actually been through it and come out the other side and can really tell it not from an advisor's perspective, but from an owner manager's perspective, which I think should be really insightful for you. So I'm sure you'll find that really interesting and a sort of different take. And I don't think it's often that you get the chance to listen to people who will do that for you. So we're really grateful to Matt from Duratech, who will talk to you about a management buyout and a trade sale, and also to Andrew from T. Allen, who will talk you through an employee ownership trust transaction. And as I said, we'll have Q&A at the end. So that's sort of the agenda. So we've got quite a lot to sort of get through. So I'll kick straight off. So in terms of potential exit routes, there's three. So trade sale, management buyout, or employee ownership trust. What do we talk to our clients about to help them think of which of those options will be the best for them? So broadly, in terms of the buckets we sort of ask people to have a look at, valuation, price, often very important to people. What price am I going to get? Understandably, it's probably the most valuable asset most people own, their business, and we're often engaged to help maximise that price of people. But not actually always. We've got clients at the moment, we've got a business probably worth about 70 million, and actually they want to gift that away to their employees. Now, not everybody would take that view, and that's quite an unusual view, but it just shows you that not everybody's objectives are the same. Next sort of structure. So you've got your valuation, but when are you going to get that, and what are the strings that are going to be attached to that to when you get that? Then sort of legacy. If you're an owner manager, often it's been your baby. You put your heart and soul into growing it. So there's a lot of emotion involved in it, really. So what's that? The other side going to look like? What's the legacy going to be? Is often very important to people. And tied to that, employees. Employees have helped you grow it, probably. What's it going to mean for them on the other side is often important. And lastly, the fifth one, really, time frame and certainty. How long is it going to take to get there, and how certain are you that it's actually going to get to the position you want to be? So then we'll go through each of them, the options in turn, really. So first of all, trade sale process. Now up on the screen is a very, very simplified trade sale process, but it's just to give an idea of what actually goes on in a trade sale process. So the first thing is you've got to find a buyer, and that's obviously an external buyer. So that could be a competitor, it could be a supplier, it could be a customer, maybe it's private equity. They don't know you usually that well, so you've got to give them some information, and that's usually in the confidentiality letter. And then you've got to see whether you agree on price. So you've got to invite offers or get the offer up, come to a deal and negotiate a deal. Then they're external, so they don't know you, so they're going to want to lift the bonnet up and really understand what it is they're buying. So that's a process called due diligence. And then hopefully we get to the end and it's legal contracts and sort of legal completion. So that's a simplified sort of process. What are the pros and cons? Well, if you can find a strategic buyer who really wants a business for specific reasons, you could really maximise your price under that sort of process. You have had to give information to other parties outside your business, though, on the way, under confidentiality letters, but still it's gone outside the business. They don't know the business very well, so they are going to take time to get comfortable through that sort of due diligence sort of process. And you've got to find the buyer. So normally people might well engage someone like us to go and look at the market, find the buyer for them. But obviously it's not necessarily true that those buyers are as interested in the business as you hope they might be. They might not be in buy mode, something might be going on in their business. Hopefully with a good business you can find the buyer, and usually we do, but obviously there is a bit of uncertainty there. Can you find that buyer? And it's an external party, so they have their own objectives. So will they stick to the deal? Will they get so far through, want to chip the price? Will their priorities change because something happened in their business? So will they stick to the deal? Is the question. So when we've been through lots of trade sale processes with our clients over the years, what are the sort of positive emotions we've seen with them? Attractive offer comes in, people get quite excited. That's obviously that can be great. Maybe you've got a large business that's showing interest, and that can give people quite a sense of pride that they've grown a business. Actually, and sometimes people, particularly maybe in this region, they undervalue what they've got and what they've built, and actually it's pride that actually is of interest to bigger businesses. Maybe you've got to a point, you're now going to get part of a larger group, they're going to bring resources, access to new markets, it's going to give the business the ability to expand and grow, and people can feel quite content, they're going to end up with a happy home, and the business is going to go from strength to strength. It can be a lengthy process, not always, and then often, one of the things we hear from clients is actually just relief to get over the line by the time they get to the end, because it does take a little while. And hopefully they're delighted by the price paid. Not always, of course, but hopefully they're delighted with the price paid. So they're positives. What about the negatives from a trade sale point of view? They don't know the business, so they're going through due diligence. People are always surprised with the level of detail people want to look at, and they're always frustrated, or often frustrated, with how long it takes. I think that's one of the things we most see for a trade sale. You're negotiating with a third party you don't know. People can feel quite anxious about that. We try and take that burden off people as much as possible, but you've got anxieties you're going to end the way we're hoping it's going to end. Sometimes there's earn-out based on hitting sort of future profit targets, and that's once you've already passed on ownership. So there can be a bit of sort of unease. Am I going to get that payment if that's part of the structure? It isn't always part of the structure, but if it is. the buyer doesn't know the business that well, as I've said. They maybe think you, as owner manager, are more important to the business than you actually think you currently are. You think you step back. To de-risk it for themselves, they often want you to stay on, and maybe that's a bit longer than you hoped, so you can feel a bit frustrated with that. Again, not always the case, but it can be. Rob will talk about the legals better than I will, but there's more in there when it's a trade sale process, so sometimes people feel a bit anxious about what that looks like for them. And then it's a new owner who you probably didn't know that well before this happened. What does that mean for the future of the business? What does it mean for the future of the employees? People can sometimes feel a bit nervous about that, and what's that going to look like the other side? So that's sort of trade sale. So the next one is sort of MBO. So again, very high level, but how does this work? You start off with a trading company. You then set up a new co, which is a shell company. That's owned by the senior management, so in this case 3 managers. It hasn't got any money, it's just set up as a shell company. That then goes to secure some funding externally based on the cash flows and the security in the trading company it's going to buy. And with that cash, it then goes and buys normally, doesn't have to be, but normally 100% of the trading company. And the cash goes out to the exiting shareholders, and also there's usually some cash still owed to the exiting shareholders, deferred consideration, which comes over a period of time. So high level pros and cons of that. Senior management, it's great. The 3 managers in my example, they end up stepping into your shoes, and over time they end up owning that business and getting all the risks and rewards of ownership. You do need a strong team to be backable though, to achieve that. You haven't had to market the business for sale, so that's a positive. Obviously, it's dependent on funding, as I said, and the seller sort of supporting it by being owed some money over time. So that deferred consideration, how much you get on day one, can be seen as a sort of negative. With a motivated management team, they're going to work in the business. They're really going to want to take control. They're the right management team. So that means the transactions, assuming you can get close on price and structure and all the rest of it, it's pretty certain, really, that it will actually happen. You'll normally be able to work through any difficulties that you've got with people. So in all the MBOs you've seen, what are the sort of highlights in terms of positive emotions? Feeling quite content that the key staff have helped you get there. You sort of rewarded them with ownership. They've been in the business, they're probably in line with your culture. They'll probably run the business in a similar way to what you've run the business. So you can feel quite happy that the business going forward is going to be looked after, and so are the employees as it goes forward. You haven't had to release commercial information outside the business, so you feel a bit relieved at that. And sort of quite satisfied the deal's quite likely to happen, in fact very likely to happen, as I said earlier. And you haven't had to have really difficult negotiations with a third party. There may be some difficult negotiations with an internal party, but that's different because you know them. It's a different sort of dynamic to it. Negative emotions. The management team now own it, it's theirs. Usually if they're the right management team for it, they've got their own plans for the business, where they want to take it. And actually, they now own it. They quite like the owner-manager to exit stage left quite quickly, usually, not always, but usually. And actually, the emotion, that's quite difficult sometimes for the owner-manager, because it's been their baby, and actually, oh, okay, they can feel a bit disappointed with that. But that's the reality, they now own it, and they're wanting to, next to take it on. This is an interesting one. Quite often, it can be a bit of frustration in terms of the financial dynamics, because the management team are usually employees. They haven't got loads of money normally, so they have to put some money into the deal, what's called hurt money, and show commitment to the funder that they're committed to it. But it's normally a relatively modest sum, because it's a big sum to them personally, but it's actually relatively modest because of where they are in their life. So it's normally sort of maybe 1 time salary type level, which is a lot of people to raise, but in the deal it's small. Compare that quantum to what the owner, if it's a good business, is owed on deferred, and the owner can sometimes think, well, I've got all this deferred that's worth millions, and you're only putting in 1 time salary. Not necessarily the right way of looking at it, but that can be that's an emotion we sort of see with people. Linked to that, The day one cash might not be as high as they were hoping because it's dependent on sort of funding. And again, David will talk about this more, but in terms of debt funder, if they're putting money in, they will rank above the owner who's got deferred, and sometimes people are a bit disappointed with that, but that's the fact of life. And last but not least, EOT process. So how does that work? Quite a similar way to an MBO, trading company. This time, rather than NewCo, you've got a trust set up, which is for the benefit of all employees, and they have indirect ownership. It does the same things if it wants to raise funding. It has some funding which is secured based on the cash flows and security of the trading company. It buys a majority, doesn't have to be all of it, so 51 to 100% of the trading company. And again, like an MBO, the cash goes out and what's left is deferred consideration, which comes over a period of time. So high level pros and cons of that. But it's great for legacy, it's great for the employees because they now get to own the business. My guy who's got a business worth 70 million wants to give it away, he's an altruistic owner, it's brilliant for him as an answer for succession. Again, like an MBO, you haven't had to market it for sale. Again, you depend on funding and deferred consideration in terms of day one cash. Zero capital gains tax, which is often considered quite a positive. Uncertainty of exit. The three options, this is the most certain. If the owner manager decides they want to do it, engages the right advisors, you will get there under an exit because you're much less dependent on third parties and what they do. What emotions have we seen when we've done lots of EOT transactions? People are very happy, they're protecting their legacy. Rob will talk about the legals, but people generally feel relatively relaxed about what the legals say from an owner manager's point of view. The process is not straightforward, but it's relatively straightforward compared to the other two options. So in terms of the ease of the process, you need to engage with the right sort of advisors who are used to it and can help you, but it's relatively easy compared to the other two. They're very, very pleased with the tax rate, because if you're not pleased with 0%, then I don't know what you're going to be pleased with the tax rate. It's usually pleased with the tax rate. And the sort of transition is normal. It doesn't have to be, but often it's over a longer period of time. So the owner-manager often stays involved. It's a transition over time. Senior management step up. If that's one of your objectives, to have a smooth handover and remain involved, that can be great for some people if that's their objective. In terms of negatives, day one cash, similar to MBO, maybe sometimes disappointed with that. Linked to that, maybe people are feeling nervous. Am I going to get paid? Sometimes, am I going to get paid deferred? Though they might be in the business and therefore feel less nervous. Are the management team, the employees, going to step up and take on responsibility? Am I still going to be making a lot of decisions? That's something we hear quite often. And then sort of the last one, people often feel uneasy about how a business decision is going to be made. When it's fully employee owned, are all the employees going to have a say in all the decisions? Actually, once you've talked that through in terms of how it works in practice, people can get comfortable with that. But that's often something we hear at the start, really. And that's me done. So that's hopefully helped sort of set the scene, a quick trot through the options, really. And then I'll now pass on to Matt Robinson, who will talk you through his experience at Duratec.